Hey, what's going on, guys? Today I wanted to just share some news and do a market update that I've shared in the Drippy community a few days ago. And basically, if we start from the top here, we did see pretty good positive inflow on the ETFs, which is always a good sign. If you look at the BTC inflow, it's about 1.42 billion. ETH inflow 479, and nothing too crazy, right? Solana 47 million. Fear and greed was at 45 a few days ago, but probably lower right now. And if we are looking at technicals, BTC was getting rejected at the daily bear flag level. And then I believe that the Bitcoin price action would still be the main driving factor unless there's some things that are happening. Like, for example, if ETH is decoupling to the upside and Bitcoin is kind of just moving sideways, then maybe that could be a bullish catalyst. But it's really hard to see a scenario where Bitcoin is tanking really aggressively and a lot of these altcoins are kind of breaking out, right? Theoretically, it could always decouple, but at the same time, it's much more likely that Bitcoin, if it keeps trending down, a lot of these other assets are going to trend down as well. And I've been looking at the stock market as well. The Russell 2000 has been breaking out. And in the last cycle, ETH and alts kind of broke out a few months after. Maybe that could be something that we would see, but I'm not quite convinced that it's going to play out exactly like what happened during the last cycle, right? Because there's a lot of different factors that are different. For example, there's just much more AI interest when it comes to investing, and a lot of investors are kind of riding that AI hype and betting on more growth that AI would bring. So the crypto market has been kind of slow. And if we look at the technicals for Bitcoin, you could see that we were tracking this daily bear flag zone and it's still being in this zone so far, and maybe it's breaking down if it keeps dropping, right? And of course, it doesn't mean that it's going to like 100% break down, or when it's starting to break down, it could not reverse, right? But that's just what I'm watching out for. If there's a stronger breakdown, then I'm looking for buying opportunities, right? So Bitcoin at 90K right now, I'm still buying Bitcoin, just dollar cost averaging in, but I'm not going to be selling a lot of other assets to be buying Bitcoin if I'm trying to stack more Bitcoin, right? Because in my opinion, the price could always go down more. And I already have a decent allocation to crypto. So I'm just kind of slowly stacking that part. But basically, if this breaks down, a lot of altcoins could be falling as well. And if we look at macro really quickly, the rate cuts are expected to slow, but at the same time, Trump is putting pressure on the interest rate cut. He's trying to drive it as slow as possible. So that is something to consider. And there's also a lot of macro uncertainty. Trump just recently said that he's going to impose 10% tariffs on Euro countries starting February 1st. And it's an attempt to put pressure on those Euro countries, and he's trying to get control of Greenland, right? And from my research, it seems like he wants Greenland for defense systems and get to that untapped natural resources so that they don't have to rely on China, right? So there's a lot of macro stuff and a lot of things that seems to be escalating a little bit, causing uncertainty in the market. And if we look at the stock market, we did see a small gap down here and prices kind of moved down. And then if we look at daily chart, the prices did correct by a decent amount, about like 2.5, 2.6% from the high, right? So not too bad, but nothing too aggressive like in 2025. But if the stock market is kind of tanking quite aggressively, a lot of crypto assets are likely to tank as well. Bitcoin and ETH trades much more closely like a tech stock rather than like something like gold. If we are looking at gold, it doesn't have that much correlation to the stock market, right? So when we're investing, it's always helpful to have uncorrelated asset. And this is what I help clients do as well. We buy different uncorrelated assets so that we're properly diversified and that these assets have a good chance of moving up in price like 10 to 20 years from now, right? That's the core of investing. And if we're buying stuff like crypto, then it's even more important to be buying these other assets because crypto is still a new industry that is growing. It's just a lot of risk, especially if you really need to rely on these investment gains. Then we want to kind of make sure that we are accumulating these other assets, right? So gold has been breaking out, and gold breaking out is always another sign of like either like an inflation hedge or like a hedge against uncertainty, right? A lot of investors, a lot of countries, they're buying gold to hedge against a lot of uncertainty that is happening right now. So macro conditions could definitely spook the market and affect investor confidence. If there's an escalation of conflict, typically governments do print a lot of money to try to fund these conflicts. So it doesn't really make sense to be selling a lot of these assets, but rather just keep accumulating these solid assets over a longer period of time, right? And let's pivot a little bit and look at some crypto specific news and catalysts that are happening. So one of the news is just ETH has been seeing a lot of staking and there's just not a lot of unstaking queue, right? So this could be a sign of where people are accumulating Ethereum. If we just look at the validator queue, you can see that when prices was higher, about like $4,000 to $5,000, a lot of people were unstaking ETH to exit out of their positions, right? And then right now, prices is sitting near like $3,000 and there's just not a lot of unstaking and there's a lot of staking keys, right? It could just mean that a lot of people are kind of accumulating ETH and they're trying to build a position in ETH. And if there's a higher price movement, we could probably see another unstaking queue that is happening, right? In my opinion, ETH is a pretty decent bet, especially if we are looking at charts like ETH to Bitcoin. It's not really looking like it's going to crash anytime soon, right? But if Bitcoin goes down really aggressively, there's a ton of uncertainty. Maybe we could see a sharper drop. But in my opinion, this is still a better buy than, like, let's say you're buying ETH all the way up here when it's kind of overvalued against Bitcoin, right? This is what Tom Lee has been pointing out as well. He's been giving like a target for ETH based on the ETH BTC. But of course, he's extremely biased, right? He's running like a ETH treasury company. And what is also interesting is that Bitmine has been accumulating a ton of ETH. They're trying to get to 5% ETH. And they're also making a ton of money from staking ETH, right? They're projected to make about like 400 to 433 million from the ETH staking and their cash position alone. And if ETH grows to, let's say, 10K, then their earnings would grow as well, right? A lot of Bitcoin treasury companies, it's just going to be really hard to generate yield safely. So Bitmine, in my opinion, is in a pretty good spot to actually keep accumulating ETH and then earn these staking rewards for the shareholders, right? And one of the more interesting news that caught my eye is that Bitmine has invested 200 million into Beast Industries. Mr. Beast is pretty much one of the top content creator right now, right? So if there's a partnership going on, this could bring more eyes to crypto and to ETH, and maybe they'll launch some sort of crypto native products as well. This would make sense, especially as more and more products are coming on chain and more people are coming on chain as well. So this could be a pretty good catalyst over the mid to long term. So that's an interesting bull catalyst. And then there's also a bear catalyst here as well. The Senate delayed the vote on Clarity Act. Here you can see Coinbase's CEO, Brian Armstrong, pulled his support for the bill. This paragraph is really important here. Armstrong believes that this bill would basically put a de facto ban on tokenized equities, DeFi prohibitions that would give the government unlimited access to your financial records, a limited role for the CFTC, and restrictions on the kind of rewards that companies could pay customers who hold and use stablecoins. So in his opinion, there's just too much regulation that is going to hinder the development of DeFi and the operation of a lot of on-chain companies, right? And this could be the case where traditional banks are kind of fighting back. They're lobbying the government and trying to tilt the bill to favor them more than like these DeFi companies and newer crypto companies that are popping up, right? So that's a bearish catalyst that is potentially on the horizon. And it would not be good to have no regulation, right? It's really good to have regulation clarity. But at the same time, if it's overregulated and there's just not a lot of room for innovation, then growth could be limited as well. And if we're looking at LPing opportunity and buying opportunities, I think a lot of altcoins are just trading at a level where it's still quite cheap, in my opinion. Would we go lower? Of course, we could always go lower if Bitcoin basically dumps below like 80K. I think a lot of altcoins would definitely go lower. But at the same time, it is trading at a level where it's quite cheap compared to the price action of the last 2 years, right? I've personally been accumulating some altcoins, but I'm not going to bet the whole farm on like these altcoins either, right? A lot of altcoins are going to have economic value, But also a lot of coins from the last cycle or a lot of like layer 1, layer 2 tokens, they're not going to have like future value later on, right? So we got to kind of really be selective. In my opinion, a lot of assets like Solana or Hyperliquid is trading at a great entry point, but at the same time, could it drift lower? We definitely could, right? And one thing that I want to point out here is if we go to this cryptocurrency topic on Google Trends and we kind of use sentiment analysis, right? And let's just say we are looking at worldwide and change the time frame to the last 5 years. You can see right now the interest is quite low at 29. And if you look at the low point, it's at 20, right? So interest has been quite low. And if we just look at these areas of low interest, it has always been like a great area to accumulate, right? And if we look at like these peaks in like either 2021 or over 2025, you can see that if the interest is really high, a lot of times it's going to align with the price that is quite overheated. And then maybe that's a zone that we could be taking profits, right? If we're looking at something like ETH, you could see in August, prices was at like $5,000. Now it retraced all the way to $3,000. You can see again in August, the interest was quite high, right? And if we look at the peak of the last cycle here as well in November, you can see it roughly aligned to the interest chart here. So in my opinion, when the interest is really low, a lot of people are exiting the market and then there's just not a lot of people talking about crypto. That's probably the best time to be accumulating. Of course, we never know when the interest is going to be back. If we see a deep bear market where there's a lot of structural issue and a lot of assets are kind of trending down quite aggressively, then we could be looking at a scenario where the interest is going to be low for quite a while, right? But if the market reverses and then there's more bullish catalyst, we could be looking at a potential reversal to the upside. Of course, we never know what catalyst is going to come into play. Like for example, when I was making the analysis before the Greenland stuff come into play, the chart seems to be swinging up. A lot of the assets are looking like they're recovering, but then a negative catalyst come into play and basically change the entire analysis, right? So it's really important to stay flexible and it's really important to look at like, okay, am I looking for buying opportunities or am I looking for selling opportunities? And just have a plan in place in case you're wrong, right? For example, if your market outlook is bearish, you want to still have some long exposure in case the market does drift up. Then you could be looking at some really nice profit. But then if the market drifts down, you could accumulate more, right? And on the flip side, if you are a ultra bull, it does make sense to be stacking some cash on the side in case the market dips even further. Then we could take advantage of that dip, right? So that's pretty much it for this market update video. I hope it was helpful. And if you want to learn more about yield farming, then feel free to watch the other videos on my channel. I'm still yield farming through this volatility. In my opinion, it's one of the best ways to accumulate crypto asset, but you really need to know what you're doing. Otherwise, you could lose a ton of money doing it as well. Thank you once again for watching. I'll catch you on the next video.